Bob Iger is probably the smartest media executive in history. What he's done at Disney is mind-boggling. And Harvey Weinstein is probably one of the best independent movie makers ever. So for a long time, Disney was sponsoring Weinstein with Miramax and making independent movies. Iger then decided the Disney brand needed to be clear, clean, and unfettered. And so during that period of time, Miramax didn't fit that distribution model. It was different selling a Disney movie than it was Shakespeare in Love or Pulp Fiction. And all of those movies were being sold through just that singular distribution mechanism. And Disney had affiliates since it was part of a family of TV stations.
So Miramax was left out in a way.
Miramax was left out. Harvey then moved on to build his own firm. They bought Harvey out, and Miramax was sitting in Disney as an orphan.
Miramax, you bought it in 2010 for about $650 million. You sold it at a profit. Part of the deal's success really rested on negotiating and distributing through Netflix, Hulu, Amazon. You did all of that negotiation, or your people did. What did you learn through those negotiations about those specific platforms?
Well, it's humbling, of course, because the technology is changing so quickly. And Netflix, at the beginning, was a bizarre idea. And it was a bizarre idea because you have all of these competing venues that are taking place. So you have cable, you have station distribution of TV, you have video on demand, you have subscription video on demand, and then you had Netflix and behind that Hulu and the onset of Apple TV, all these other things. So the pricing was just a negotiation because neither we nor they really knew what the ultimate value of all of this was going to be. But what we learned was the value of content. If you're a 24-hour provider in any distribution, you have to fill up that 24 hours.
Don't I know it?
Right? Exactly. And you guys are living proof, and you do a fantastic job of it, but it's a never-ending chase. So that was the beginning of taking an asset that was not distressed, best-of-class independent product that had never had the opportunity to be distributed that way. And that's what really opened up the amazing values. As Netflix got better, as the international marketplace got better, the international marketplace was devouring this stuff because Disney had never distributed it there. Even domestically, Disney was distributing through its own affiliated networks.
So you unlocked a tremendous amount of value with the assets that the company had already. That was a major contributor to the profit. What was the return on that deal?
It was about 4 times equity. It was a phenomenal return for us. And not because
how does that stack up against your real estate portfolio in terms of
much more significant. You know, real estate is a slow-moving train. At the time, by the way, nobody was cheering, saying, well, wow, Colin just did this incredible, brilliant deal. They said, Tom Barrack's gone out of his mind.
Everyone knows you, even though you had done media deals, everybody knows you as a real estate guy. That is what you do best.
I don't know if that's what I do best. Everybody knows me as a contrarian. At the time, and this is the key to investing, right? When everybody sees it is not the time to do it. When no one sees it is the time to do it. So everyone in the media business had an opportunity to buy it, right? It was not unfounded. It was being auctioned. Nobody really saw the contributive value. And so it's about turning left when other people are turning right on things that you have some competitive edge at. So,
well, that brings up another interesting question. Do you think the Dreamworks deal is a contrarian bet, or do you think it's an obvious bet that Comcast bought Dreamworks?
I think it's not as significant a bet as anybody thinks. I mean, look, Comcast is a $160 billion enterprise value company. Whether they pay $3 billion or $4 billion, it's punctuation, right? It doesn't mean anything. So you get a brand, you get filler, which is important.
It's the difference between doing a strategic deal versus, an investor-led deal.
Absolutely.
Yeah.
And by the time, if they had an intent of taking that theme and trying to build it in-house, it would cost them twice as much. So I think it's a really smart deal. I think it's a smart deal for everybody. I don't think it has any bearing on an economic analysis of what does this really mean to us in terms of earnings per share 3 years from now.
But does it impact your ability to do a deal in the space? Because you would think that it increases the value across the board and it gives other media properties that have strong content higher valuations as well.
It gives everybody hope. It's like being in this town and writing a script.